What is the true strength of the American homeowner? So you're probably seeing headlines about the housing market. A lot of them are negative. And so I thought we'd take a look at how is the homeowner in America doing right now and what's their position. And when I say position, I mean, what is their loan to value? So loan to value, the way that works, that's how much people have borrowed relative to what the house is worth. So if someone has a house that is worth $200,000 and they put 20% down on it, they put $40,000 down and they borrow $160,000, they have 20% equity in the house and an 80% loan to value because their loan is 80% the value of the house. Well, right now, American homeowners have the most equity they have ever had. And you're probably like, well, Justin, that's because there's been tons of inflation and that makes the numbers higher. No, they have the most equity they've ever had adjusted for inflation. On average, American homeowners have about 30% equity in their house, which leaves about 70% loan to value. So what does that mean for the strength of the housing market moving forward? I hear some people saying, hey, are prices about to turn down? Are we going to see foreclosures in the market like we did in 2008? Well, if that's what you're thinking, let me tell you, there are two things that typically need to happen to lead to a lot of foreclosures. The first of all, people need to not be able to pay their mortgage. That's usually the last thing that people stop paying, right? I mean, if you could think about, hey, I'm running out of money or I don't have money, what is the last thing you're going to pay? Or the last thing you're going to give up? It's usually your house. I mean, usually you would stop everything else. And so will people stop doing that? Well, one, people only stop doing that if they can't pay. Right now, the job market is strong. I mean, could that change in the future? Of course, anything could change. But right now, employment is strong, unemployment is low. And even with things costing more, the inflationary pressures we've had, housing payments are going to be one of the last things that people stop. And you guys know, if you listen to this, that housing is a hedge against inflation, because if someone got a 30-year fixed mortgage or a 15-year fixed mortgage, that payment hasn't changed, even though everything else is more expensive. So we're not seeing that. We're not seeing unemployment rising and employment pressure that would lead to people not paying their mortgages. And secondly, if you couldn't pay your mortgage, what would you do with your house? Well, if you have 30% equity, you would sell it, right? Your house is worth $200 and you owe $140. Aren't you going to sell your house before you stop making the payments? Yes, that's what people are going to do. And right now, houses are selling. I mean, houses are still selling great. Buyers are buying, sellers are selling. So if someone is in that position where they are in a tough spot and they need to sell their house, they can do it. They can make one call to us, sell the house, put all that money in their pocket. They're not going to let the house foreclose. So I think you can see the strength of the American homeowner with fixed rates. A lot of them are low. So I actually saw recently that over 90% of American homeowners have mortgage rates under 5%, and 60% of people have them under 4%. So they have fixed rates that are low, that were affordable when they bought the house. They have a lot of equity in the house, and employment is good. So if you're like, hey, I'm an investor, I'm hoping that I've got money on the sidelines, I want to pick up bank-owned properties or foreclosures, you may be waiting a while. It doesn't look like that's about to happen. Now, if you want to pick up an investment property that is a good deal, not all good deals are foreclosures. There's a lot of other ways to get good deals. We did a video on that recently on buying your first investment property, which you're welcome to go back and watch, or just reach out to us and we'd be happy to help you do that. But I can clearly report today, the American homeowner is in good shape with lots of equity, with a strong job market, with fixed mortgage rates that are low. And so I think for the health of the housing market moving forward, homeowners, they're in a good spot. Thanks for watching, y'all. We will see you guys next week.